So, get this. What if I told you that you could turn 1,000 euros into more than 86,000 in just 10 years? It sounds a little wild, right? But it's all about a powerful idea called the snowball effect. And in this explainer, we're going to break down exactly how that works.
You might be focused on that final number. And yeah, it can be pretty surprising. But the real magic here isn't just the total amount. It's the simple but incredibly powerful engine that actually drives all that growth.
So first things first, let's dig into that exact question.
But hang on. Before we get to the exciting results, we've got to look under the hood. For this to make sense, you need to understand the rules of the game we're about to play. Let's lay out the parameters for our simulation.
Okay, let's dive into this. Here's our setup. We kick things off with a 1,000 euro investment. Simple enough. Then we add the fuel, a consistent top-up every single month. We're going to assume the stock itself grows at a pretty modest 3% a year and that the dividends it pays out grow by 2%. Now, for a reality check, we'll factor in a 30% tax on those dividends. And finally, the magic ingredient, we automatically reinvest every last cent we get back. Honestly, that last part, that's the secret sauce to this whole thing.
Yeah, this process, dividend reinvestment, is the absolute heart of the snowball effect. See, you're not just saving your earnings. You're creating a system where your money literally starts working for you. Your earnings buy more shares, those brand new shares then create their own earnings, and that cycle just keeps repeating, getting bigger and stronger every single time.
All right, enough theory. Let's put this thing into practice. We'll start with a scenario that's really achievable for a lot of people. Our initial 1,000 euros plus just 50 euros a month. Let's see what that one simple habit can build over time.
And bam! Right away you can see the engine starting to kick into gear. At the very beginning, your investment is paying you just 2.63 euros a month. Not much, right? But you stick with it for 10 years, and that monthly payout has grown to over 35 euros. Your investment is now paying for a small bill or maybe a few nice coffees every month all by itself. That is a growth of over 1,200%. I mean, think about that for a second. Your passive income stream is growing way faster than your total investment. Now, what's really interesting about this slide is why. It's because every single euro it generates is immediately put back to work, which creates this incredibly powerful compounding cycle.
This table here really shows the snowball as it starts gaining momentum. I mean, look at the difference. In the first 5 years, your capital grows by about 4,400 euros. But in the next 5 years, it grows by over 6,200. See? The growth isn't a straight line. It's accelerating. The snowball is getting bigger and it's rolling faster.
And this is where it really clicks. After a decade, the dividends your investment is spinning off are paying for almost half of your monthly contribution. Your investment is literally starting to fund itself. This is that tipping point, where the snowball really starts to power its own growth. Seeing that kind of growth, it makes you wonder, doesn't it? If 50 euros a month can do that, what happens if we decide to add a lot more fuel to the fire?
Okay, this is where things get really interesting. We're going to keep every single rule the same. The only thing we're going to change is that monthly contribution. Let's scale it way up to 300 and then even 500 euros and just see what happens.
All right, time for the big reveal. Let's compare all three of these scenarios side by side. This is where you're going to see that true exponential power of your contributions firsthand.
And this brilliantly illustrates the whole point. Just look at the visual difference between these bars. It's staggering. Going from 50 to 300 a month, that's a 6 times increase in what you put in. Well, that gives you nearly a 5 times bigger portfolio. But watch this. Going from 50 to 500, a 10 times increase gives you an almost 8 times bigger final result. The more fuel you add, the more dramatically that compounding effect amplifies your money. This isn't just simple addition anymore. This is multiplication.
And it's not just the total capital that grows. The income engine itself it explodes. At 500 euros a month, you're eventually generating over 133 euros in passive income every single month. That's more than 1,500 euros a year, a return that just keeps on growing, all paid for by the investment itself.
This quote just nails the core lesson here, doesn't it? The snowball effect is exponential. Every single increase in what you put in has this huge outsized impact over 10 years. It proves it's not just about how long you invest, but also how much fuel you give that fire along the way.
So, the crucial point is, after seeing all of this, what should you take away from it? What does this actually mean for you? Let's break it all down.
It really all boils down to a few simple truths. First, consistency is your foundation. That's the non-negotiable first step. But the amount you contribute, well, that's the accelerator. As we just saw, more fuel creates exponentially more growth. And the engine that drives it all is that dividend reinvestment, creating a self-funding loop. The biggest lesson here? Small, disciplined actions, when you repeat them over time, can build some truly extraordinary results.
So, we'll leave you with this. We've run the simulation. The numbers really do speak for themselves. The only real question left is the one you see on the screen. After 10 years of consistent effort, what could your snowball look like? Thanks for joining us.